What is going on out there, peeps? All right, let's get back into silver. I haven't talked about it in a couple of days, and when I don't, people automatically assume there's something wrong with it. All right, we're going to get into what's going on, and trust me when I tell you, the silver squeeze is still happening. I keep encouraging people to continue to do your best to remove physical silver off of the market. All right, we will get into that as well here just a little bit. I'm gonna play some things for you guys to listen to because it's really important. You guys know if you're thinking about buying precious metals, then you should reach out to our friends over there at Money Metals Exchange. The link is down in the description. First time buyers in Puerto Rico or the United States, if you spend more than $100, use promo code Pimpy, P-I-P-Y, and get a free half ounce of silver. If you are a return buyer and you spend more than $500, use promo code SQUEEZE and you'll get $10 back. You guys know I got Pimpy's Investment Chat over here. It's the same name as my YouTube channel. Come join us. It's free to do so. Over here we talk about gold, silver, cryptocurrencies, as well as other currency investments and other ways to make money. Okay? So come on over there. And again, I want to remind everybody, if anybody has any skills as a developer, please reach out to us. We are looking for developers to help us with the project. You can reach out to us. Send me your resume at pimpy project@adamtemple.co. All right, just put this on pause, write this down, send us your resume. Much appreciated. All right, real quick over here on Wall Street Silver, they always have good posts, but some good statements as well. All right, this was done about 15 minutes ago. It says, we're almost at 40. Someone help me share in the community. So I was like, what do you mean? The last time I saw, we were just above 25 and was keeping its position. So actually, I should have checked a little while ago, but I saw that just a few minutes ago. No, it's still 25.31. Now keep in mind, every time you see these things like this, okay, you guys, looking at something like this, or you look at like Yahoo Finance or any of these market, you know what I mean? These market tickers, this is paper silver value. Okay, this isn't the real value of gold and silver. This is paper. This is the one that gets manipulated. You know what I mean? They do anything and everything they can to try to hold price down. Now, here's the irony about this thing, or I should say the irony, but this is so crazy about this. I just looked at gold and silver probably about, 10 minutes ago, and silver was above 1,700 and moving. It was going in a positive direction, and now it seems to be going back down again. They're going to drive these prices down. Silver is still going up, though, not by much, but again, it's starting to rise back up. Look, they're going to do every trick in the book, to get you to stop buying silver, stop buying precious metals, and to continue to push you in more riskier, worthless investments. Okay, so just be careful when we're out there. Again, looking at this, Bitcoin was up above 50,000, and it looks like it started to come down just a little. You can see the reds over here. They're coming back down. So markets going down, gold, silver going down, gold and silver were going in a positive direction, but are now going down. They're going to try to keep you discouraged from going into gold and silver. There's no doubt about it. You can hear other people talk about that, all right? But again, in Wall Street over here, this is stuff we're looking for. Look at this. Am I crazy, or has no one reported that physical silver, PSLV, which is stock by the way, upped its shelf offering from 1.5 billion to 3 billion in just 5 days ago? How has no one noticed this? Check out Edgar's site. So it's got these things here. All right, so PSLV has doubled its shelf offering. This must be anticipating a lot more in addition to inflows. So again, look at this. I just recorded my 1 millionth ounce sold on Amex. Since I started stacking on February the 22nd, it took 13 days and 8 hours to reach 1 million ounces of silver, or as I also like to think of as 200 comics future contracts. 200 future comics contracts. So, look, we're talking about February the 22nd here, all the way to where we are now. Over 1 million ounces sold. I keep telling you, the squeeze is still happening, you guys. Just because you don't hear a lot of news about it and you're looking at the paper value, that has nothing to do with what's really going on in the physical world. Those are just tools of manipulation. Okay? Keep buying silver. Man, tell me that don't look sexy. What are these, 10-ounce bars? Yeah. They're stacked. So, yeah, this guy's probably got a few thousand ounces right here. It's really nice. I do like this Wall Street silver. Look at this. People selling their stuff. They don't want cash. Cash is worthless. Cash not wanted, except the payment of physical silver, as it should be. So, yeah, I like going on here. Oh, yeah, that's just beautiful, man. Look at that sucker. I like going on here and looking at the pictures of people's stacking. It is pretty cool. You know what I mean? There's a lot of good things here. Comforting lies, unpleasant truths. Man, this is definitely me. I got to come back to there. People are definitely all over me when I come to talk about things that they don't like. Anyways, this kid's 17. He gets it. Listen to what he has to say about what's going on with the silver market. Of course, ups to Chris Marcus here, good guy. But I just like to listen to this kid. He's on all of the latest and greatest things to know about, when it comes to currencies around the world and the history of them, which is pretty deep. Anyways, he's already been banned off Twitter since he was 15 years old. But listen to what he's talking about, what he sees happening now.
You know what it's like for most of these silver bugs. Everybody feels like the lone wolf in their town. They're always getting giggled at, by their friends, or, riding the stock market bubble and levering up.
Well, unless they don't understand, like, basically, the way I see it, gold and silver has always been a good investment just through early history. Just look at the Greeks. They have gold and silver coins. That's always been the basis of the currency. And I've seen throughout basically any institution, any government, their paper dollars always collapse. This has always happened. Like the continental dollar, that collapsed, like in 50 years or something, a certain amount of years. And they make all these different paper currencies, and they always end up collapsing eventually.
Yep.
And then they always revert back to gold and silver. So I think, it's basically the hare and the tortoise analogy. You see stocks, it's the hare right now, but the tortoise is silver in a way. Silver's going to win no matter what eventually. Yep. It's just they're just trying to keep it, it's basically what they want to do. They just want to distract everybody with these stocks, with these cryptocurrencies. They want everybody to get into that because they're going to allow people. They're going to allow people to make money on that. They're going to allow Bitcoin to get up to 50,000, so people see it. Oh, let's put all our money into that.
Yep.
Because it's just a distraction where they want you not to get into silver, basically.
I do believe I said the same thing. Some of these tactics are easy to see. So ask yourself, if you had and you were forced to make a decision, gun against your head, $1 million, either invested in cryptocurrencies or physical precious metals. Think about this. I know it's just hypothetical, but think about it. If someone put a gun against my head and said, hey, you have $1 million, there is no ifs, ands, buts, or alternates. You have to put all your money into one or the other. Which one do you choose? How? Before the guy even got done saying the sentence, I don't want silver, there would be no hesitation. There's a lot of us out there that think that silver is not only going to outperform gold, but there's a great possibility that it could pass it up in value over the next 10 years. That's just my opinion. There's plenty of reasons to think that. But even this kid gets it. Look, they're using every trick in the book to get you guys distracted from buying physical metals. That's why when we all were putting a squeeze on gold and silver, what was happening? All of a sudden, magically, whoa, man, cryptocurrencies went from about 40,000 up past 50,000. It didn't take very long, and then it kept going on up to 58. Meanwhile, the prices of precious metals started to go down. That has more to do with the yield market than anything else. So, I mean, the bond market, bond yields. So again, look, I understand there's a window of opportunity in which you can make money on cryptocurrencies. I get it. I said that. I think we're in the window now. Obviously, we're in the window. I mean, seriously, we've seen record highs like never before. And I've been saying this since when? Since last March or so, even before then. I'm not a big fan of cryptocurrencies, but I am smart enough to realize there's a window of opportunity in which you can make money. On my fictitious portfolio, had you put $10,000 in Bitcoin, Ethereum, I believe I had XRP on there as well, and XLM. Had you put $10,000 in each of those and nothing else and didn't touch it up until about, I don't know, a week and a half ago, your $40,000 would have easily made you close to or about $300,000 in less than 1 year off cryptocurrencies. Only because, like I said, there is a window of opportunity and we are in that window now. For those of you interested in buying cryptocurrencies, I do have a link down below underneath my video. Again, everybody knows I'm not a fan of it. There's only one cryptocurrency I like. That's Ethereum because it has a ton of use cases. So we'll see where it went. And then I noticed something happened to this Polkadot. I didn't look into it, but it's been down for a couple of days. Very, very interesting. Nonetheless, Ethereum is the one I buy. I know people are looking for XRP. So here's my question to you guys. A lot of people want to still buy XRP. You can't buy it on Coinbase. If anybody knows where you could buy XRP, put it down below in the description so that others can see. And then the rest of you, if you want to buy XRP, just look at the comments. Having said that, again, I only go to Coinbase. I don't know anything else about these other platforms. So just be cautious about where they tell you to go. Okay? So this kid's 17 and even he knows and he's figured out they're going to try to distract us from buying more physical precious metals. It's a great distraction. It works. Most people have ADHD, man. They see where all the action is on cryptocurrencies and they're like, yeah, man, look, Pimpy, you're wrong. If you put this amount of money, you would have had 20 times as much instead of gold. Well, you keep holding on to that cryptocurrency, buddy. Let's see where you are here in a few years. Anyways, get back over to Money Metals. They got podcasts I enjoy listening to, and then I also will share with you as well because the information is informative and necessary for you to hear. These two podcasts I'm going to play were from the last 2 weeks. So let's go ahead and take a listen to the most recent one.
Welcome to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, here's this week's market wrap with commentary and analysis from the low-cost precious metals dealer voted best in the U.S., Money Metals Exchange.
Welcome to this week's Market Wrap podcast. I'm Mike Leeson. As financial markets sold off this week, precious metals got dragged down in the selling. The culprit once again was rising bond yields. On Thursday, the 10-year Treasury climbed above 1.5%. While still low on a historical range, the upside momentum has investors concerned. Over the past 7 months, the 10-year yield has tripled from its low of just 52 basis points. The 10-year note serves as a benchmark for mortgage rates as well as risk premiums in the equity markets. Elevated price-to-earnings ratios in the S&P 500 are more difficult to justify in a higher interest rate environment. As we've noted in previous podcasts, rising real interest rates are also a headwind to precious metals markets. The key word there is real, as in after adjusted for inflation. And if inflationary pressures continue to grow, that could be all that is needed to drive real rates down deeply into negative territory. The Federal Reserve may also be on the verge of restarting Operation Twist. Under that program, the central bank sells some of its short-dated treasuries and buys longer-term bonds. The aim is to drive down long-term yields. But when Fed Chairman Jerome Powell spoke on Thursday, he gave no definitive commitment to launching Operation Twist or any other intervention to tame the bond market. At some point, Wall Street may force Powell's hand. Despite trillions of dollars in COVID stimulus and more to come, the economic recovery is shaky with inflation risk rising. Trends forecaster and many-time guest here on our podcast, Gerald Celente, released a video yesterday warning of what he calls dragflation.
Powell failed to reassure investors that central banksters would keep surging bond yields and inflation expectations in check. What did we say about inflation? Only about 6 months ago in the Trends Journal, coined the term dragflation. Economy dragging down and inflation going up.
Despite inflation showing up in oil prices and elsewhere in the economy, gold and silver trading markets aren't really reflecting that reality at this time. For the week, spot gold is down 2.2% to trade at $1,705 per ounce. The silver market has shed 5.7% since.
Real quick to interrupt Mike there, and that is this. Did you hear what he said? With the way the markets are reacting, gold and silver are not responding properly to the market. That's because it's being manipulated. And I see people all the time, well, Pimpy keeps saying it's manipulated, so why is it worth investing into if they're just, the bakers are always going to win? No, they're not. That's what you don't get. This is a once-in-a-lifetime opportunity. This isn't hyperbolic that I'm talking about. Let them keep manipulating it, and you should be happy about this. You want to know why? You get to take advantage of it and buy as much physical gold and silver as possible while it's still this cheap. I keep using the ball underwater analogy. That's realistic. They can manipulate, they can keep trying it. It's not always working. You could tell every time they spoof it. Usually in the olden times, when they manipulated the market, it would take just a little under 2 months, maybe 6 weeks, if they were lucky, or if we were lucky, maybe a month, for it to start to recover back to where it was. That's not happening. When they manipulate the market and it drops, it usually starts to recover within the same day or within a couple hours. Mind you, they have dropped the price down to below $26. Premiums are even coming down. People are like, I don't want to spend it with too much premiums. You don't have to. It's going to take off. Everybody knows it. They can do anything and everything they want. Eventually, they're just going to run out of tricks, period.
Friday's close to come in at $25.38 an ounce. Platinum looks lower by 5.4% this week to trade at $1,138. And finally, palladium checks in at $2,388 an ounce after managing a weekly gain of 1.4% as of this Friday morning recording. On the plus side for gold and silver bulls, the sell-off in precious metals mining stocks didn't gain any new downside momentum this week. In fact, the GDX Gold Miners Index showed a slight weekly gain through Thursday's close. If gold and silver equities continue to display relative strength versus the broad market averages, that would bode well for precious metals themselves.
Yep.
It's been several months since a fear trade gripped Wall Street, but with stocks showing vulnerability and bonds failing to serve as a good counterweight, precious metals may begin to look more attractive to more investors as an alternative asset class for portfolio diversification. Bullion dealers, including Money Metals Exchange, have seen buying activity surge in recent weeks, especially for silver products.
Yes, this is what I'm talking about. Don't let the paper market value fool you. Look at even here on APMEX. Look at this. 1 million ounces of silver from, look, I want you to think about this. This isn't a month long. This is a 12-day chart. February 22nd through March 6th. 1 million ounces. Actually, 1,278 ounces. And it's a running total. So when they tell you, oh, the squeeze is over, the market's dropping, and you got all those, I love this because all the cryptocurrencies are like pointing fingers and laughing, going, ah, ha, ha. What are you laughing about? Why? Because your manipulated value is up and ours is down? Yeah, keep your money there. Keep on going. Go ahead, Sparky. Remember what happened to Texas and they lost their power? Remember the Federal Reserve magically lost their power? Power outages all over the world. Why? Nobody really knows. But you keep your money in digital form. Go on ahead. And we'll hold ours in physical form. Remember, it's not the paper stock market. We don't want paper silver. Stick to physical.
However, sentiment among those who trade futures and exchange-traded products is an entirely different story. The paper gold markets have yet to pick up. According to the World Gold Council, holdings ETFs that track gold declined last month by 2%. Global gold assets under management now sit at their lowest level since last June. Last month's sudden spike in silver buying did carry over to the ETFs and other derivatives for a while, but after the silver squeeze failed to sustain any big upside in price, many of the fast money momentum chasers from Wall Street bets sold out of their positions.
Fast money bettors. And they mostly moved into paper silver. So when they said a silver squeeze, a vast majority of them thought, oh, okay, we're going to do like the GameStop stock. No, don't buy stocks or ETFs. Buy the physical silver. Take it off the market. You have to personally hold it, all right? And I know some of you have reached out to me, and God bless you. You have a lot of money, and you're concerned about where to keep your precious metals. Well, if you don't, either you can find a place to stash a big safe in your place and keep it in there where nobody knows your business. If you don't feel comfortable with that, I tell people to reach out to Money Metals. They have a vault that's highly protected. You could store your precious metals with them. It's a great way to stay safe.
The online chatter on unusual volumes in silver trading caused the Commodity Futures Trading Commission to hurriedly issue a statement announcing it was closely monitoring the market for, quote, fraud and manipulation. Regulators jumped into action after a decentralized campaign by individual investors to buy silver pushed prices up for a couple trading days.
Yeah, but that's just it. We said this was going to happen. This just, again, exposes the corruption within the banking system, as well as the precious metals or commodity system, and our politicians. I told you when they did the whole Reddit, did the whole GameStop stock thing, they didn't do anything illegal. What they did is notice hedge fund people were doing something illegal and bet against them. And didn't I tell you that the politicians, they wouldn't go after the corrupt hedge funds? No. They would go after us common folk. They can't have us peasants making money, especially at the cost of hedge funds. They'll make every excuse in the world to make it sound like they're protecting you when they're protecting their multi-billionaires. That's what makes me sick about that.
For years, though, the CFTC has failed to root out the fraud and manipulation being perpetrated in the silver market by large institutional short sellers. In 2013, it ended a 5-year investigation into allegations that J.P. Morgan and other banks manipulated the COMEX silver futures market.
What?
The CFTC
Again?
claimed it found no evidence of wrongdoing.
When I tell you that the bankers and the politicians are part of the same crime syndicate, there you go. They're claiming there was no evidence of market manipulation. We see it. We could point to it. We know exactly where it is. They don't care. They never did.
The head of the CFTC at the time was Gary Gensler.
Okay. What about Gary Gensler? Oh, great. It's, what do you call that? Roman. So anyways, look, the investigation, they didn't do no investigation. They really didn't. So it's just, I told you, they're not going to be our friends. Our government has gotten so out of hand. They're such criminals. They have no problem with openly screwing over the American citizens. This is going to continue to happen until the citizens finally get tired of it and rise up. Make no doubt about it, that day is coming very, very soon. Let me see if I could kickstart this one more time. Sorry about that. But yeah, just they're not your friends, man. They're not your friends.
CBC at the time was Gary Gensler.
Like I did that.
He is
right
currently President Joe Biden's pick to run the Securities and Exchange Commission. That means for big investment banks on Wall Street, it will be business as usual. It doesn't necessarily mean they will keep silver prices depressed, however. Rising industrial demand coupled with powerfully strong retail bullion buying will test the ability of supply to keep pace. The bullish case for silver doesn't rest on engineering a dramatic short squeeze event on the futures market. Instead, it is based on the fact that silver is scarce in the face of rising physical demand. It is based on the certainty that inflation will diminish the value of the U.S. dollar and the history that shows precious metals function as sound money. Well, that will do it for this week.
See, keep pulling it off of the market. The physical silver. There's already a shortage. Somebody reached out to me under one of my videos for the dinar and pointed out something where they're at, which was very interesting. They're experiencing a short in their country as well. So it's all over. It isn't just one place, it's all over. So here you go, look at this. This is Robert. Hi, Pimpy. Silver in short supply now in Australia. Delivery time for bullion companies is now 4 weeks. Used to be 4 days. So Australia, London, the United States, all have shortages. Keep on buying it, because when they go to start pushing that Green New Deal crap on us, where is this going to come from? Elon Musk and his companies and all these electric cars and all this new technology all use silver. That's why I think within 10 years you're going to see silver surpass gold in value. That's just my opinion. Let's listen to this one last podcast because it talks about, unsound currency and digital currency schemes.
Welcome to this week's Market Wrap podcast. I'm Mike Leeson. As financial markets gyrated this week, Federal Reserve Chairman Jerome Powell touted the U.S. dollar as a form of, quote, sound money. More on that incredible take in a moment, but first let's review this week's market action. Inflation fears helped drive another spike in long-term bond yields, and by Thursday that began to spook Wall Street. The Treasury market is now off to one of its roughest starts to a year on record. As a result, calls are mounting for the Fed to up its bond purchases. A steepening yield curve is helping to depress precious metals prices. Rising real interest rates tend to be negative for the gold market, but with short-term rates remaining locked near zero and inflation pressures rising, the case for rising real rates as a major trend remains tenuous at best. If central bankers begin deploying yield curve control measures to bring down long-term bond yields, that could serve as a catalyst for the next up leg in gold and silver. Gold prices currently come in at $1,736 an ounce and are posting a weekly decline of 3.2%. Silver is also down by the same 3.2% mark since last Friday's close to trade at $26.67. It was showing a slight weekly gain through Thursday, but is selling off pretty hard here today. Turning to the PGMs, platinum is cooling off, down an even $100 or 7.8% on the week to come in at $1,188. The thinly traded rhodium market spiked to over $26,000 an ounce. Hard to believe rhodium prices traded under $1,000 just 4 years ago.
Yeah, crazy.
And finally, palladium currently commands a $2,356 per ounce price after falling 2.6% in this week's trading. In other alternative asset markets, Bitcoin prices plunged by more than 25%. The cryptocurrency had been gaining increasingly widespread adoption by some large corporations and financial institutions. At the same time, Bitcoin has come under increasing scrutiny by regulators and central bankers. Treasury Secretary Janet Yellen recently derided cryptocurrencies for supposedly facilitating illegal activity. Yellen, along with some members of Congress, are threatening to crack down on crypto markets. Meanwhile, Fed Chairman Powell, along with other central bankers and the International Monetary Fund, are vowing to roll out official digital currencies in the near future. As the globalist Great Reset agenda proceeds, a more globally coordinated centralized currency regime may be coming, one that seeks to eliminate free market digital currencies as well as paper cash. Powell told Congress on Tuesday.
Did you hear that? I've been telling you guys this for how long now? Cryptocurrencies were just a way to indoctrinate you into accepting digital currencies, period. And that eventually the government would find some excuse to kick people out of the Bitcoin and everything else and force you into the central bank digital currency. Gosh, man, I've been telling you people for how long? Every time new disruptive technology comes out, people get excited about it. I go, don't get excited. I've been saying this for like almost 2 years now. Cryptocurrencies, they lured you in with that private peer-to-peer. Nobody knows your business. Then all of a sudden they created some millionaires. Off what? Off what? It was artificially pumped up. Then what happened? People heard a lot of, they're like, hey, this little 13-year-old's a millionaire. How did this happen? I want to be a millionaire too. Oh, this is peer-to-peer. The bankers, we could beat the bankers. There would be no need for them. Oh, it was great. It sounds always good. And then eventually it would get regulated and get taxed. And then the government will find a way to get you to accept their version of it. All cryptocurrencies is a tactic used to manipulate you into accepting 100% digital currencies by them, which is terrible.
That developing a digital currency is, quote, a high priority project for the Fed, but he admitted there are still some significant technical and legal issues that need to be worked out. For now, he continues to cheerlead for higher inflation while at the same time insisting the U.S. dollar's value is stable and everyone should have confidence in holding it. In an exchange with Republican Congressman Warren Davidson, Powell laughably claimed that depreciating Federal Reserve notes are, quote, sound money.
What would you say constitutes sound money?
Well, the public has confidence in the currency, which they do, which the world does. That's really what it comes down to, that people believe that the United States currency is perfectly reliable.
Did you just hear what Powell said? He just said our currency has value because what? Because the people believe it has value. That's when we're talking about anything. People go, well, why is this worth that? Why is this worth this? I go, look it, something is only as valuable as what the highest amount of money somebody's willing to pay for it. The only thing that gives fiat currency its value is because the government, the Federal Reserve, told us that's what this value is. And we married into it and accepted it. But what happens is as people lose faith in the currencies, then the value goes down. Look, everybody knows that the U.S. dollar over the past, God knows, 100 years has lost its purchasing power. Like 98% or more of its value is gone. But the one thing since then that's been the most consistent as far as value versus worth has been gold and silver.
And stable in value.
Is it diluted as a store of value when M2 goes up by more than 25% in 1 year? Does the printing of more U.S. dollars somehow diminish the value of the dollars that others hold?
Sure it does.
You know, there was a time when monetary aggregates were important determinants of inflation, and that has not been the case for a long time. So you'll see if you look back, the correlation between movements in different aggregates, you mentioned M2, and inflation is just very, very low. And you see that now where inflation is at 1.4% for this year.
Surging food, energy, housing, and healthcare costs this year would suggest that real-world inflation is running at a much higher rate than 1.4%.
Oh, yes.
But even that rate of currency depreciation means that long-term savers of dollars are guaranteed to lose significant purchasing power as that rate of depreciation compounds. That is a far cry from sound money.
Absolutely. This is why I tell you people, listen, if you have some kind of nest egg, some retirement fund, and you still keep it in some form of fiat, whether it's stocks, bonds, or just saving in your bank, you're literally losing money. Between inflation and everything else, fees you have to pay, and eventually the market will crash and you'll lose everything, like those people in 2008. You'll be kicking yourself in the ass going, man, I should have listened to Pimpy. I should have at least moved 25 to 30% of my retirement into precious metals so that I was protected. Now I have nothing. For those of you thinking about doing it, come over here to Money Metals. See right here, this IRA programs. Go in there. You could transfer without paying any taxes.
A truly sound currency would be backed by more than expressions of confidence. It would be backed by something solid, timeless, and universally recognized. It would retain value over years, decades, and centuries, not depreciate at an arbitrarily prescribed pace. Physical precious metals are the basis of sound money. Although in theory a currency could attain soundness through other mechanisms, only gold and silver have a consistent historical track record worldwide of serving as the ultimate money. The era of unbacked fiat money may be heading toward a ruinous end. The M2 money supply has been exploding over the past several months, even as Powell expresses nonchalance at the prospect of an inflation problem. The risks of spiraling adverse consequences to all his money printing are growing. It's true that the rate of money supply growth doesn't necessarily cause corresponding price increases in the economy immediately. Cash can sit on the sidelines or be cycled through financial markets without generating any noticeable uptick in conventional inflation gauges. And as long as inflation expectations remain well anchored, as Fed Head Powell often puts it, money velocity tends to be slow. But when business owners and consumers begin to worry about higher costs ahead, they tend to accelerate their spending. That in turn causes price levels to rise more rapidly and inflation expectations to no longer be anchored at the Fed's desired rate. An inflationary spiral that develops slowly at first does not mean that inflation is therefore contained. As long as the currency supply isn't contained, then neither is inflation risk. There is at all times a limited supply of physical precious metals.
Yep.
Although supply and demand dynamics will cause price fluctuations, what makes gold and silver sound investments is that they retain intrinsic value regardless of inflation rates or other threats particular to paper and digital assets.
That's right.
As for what we are seeing in the retail markets right now, demand continues to be unrelenting. More Americans are clearly waking up to the investment merits of silver and taking action. There is some indication that silver buyers have begun to focus more on the physical metal and less on Wall Street's paper silver instruments. That's a good thing.
Yes, it is.
And strong physical demand has put upside pressure on silver prices even as gold prices have drifted lower. While other precious metals dealers continue to struggle with inventory issues and massive shipping delays, Money Metals is operating at full tilt and remains relatively flush with silver coins, bars, and rounds for immediate purchase, at least for now.
For now.
To be fair, the overwhelming public demand for silver over the past month has put unprecedented pressure on dealers, mints, and refiners, no question about it. And even though Money Metals has been able to meet the silver demand so far, there's no guarantee our rapid restocking of inventory will continue to go so well. As always, keep your eye on your email inbox for updates on this situation and other market developments. Well, that will do it for this week.
I want to thank Money Metals, Mike Gleason, for giving these weekly podcasts. Every opportunity I get, I will come over and get these for you because it's good to know. It's quick information that'll help you in your decision making when it comes to buying precious metals. Once again, don't be fooled and don't listen to the idiots out there talking about cryptocurrency, this, that, and this. Look at this. They're going to keep driving down the value of gold and silver. And what did I say? I don't care if they drive it down to $1 an ounce. To me, that is seriously buy on the dip. Here's the thing about this. This is backfiring. What I mean by that is simply this. They keep driving down the value of gold and silver, thinking they can scare speculators or even amateurs into selling their physical metal. They are sadly mistaken. When we see this happen, we just buy more because it's like having to sell on the things that matter most. Keep buying silver. You are making a difference. All right, that's it for now. Let me know what you think. Hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel. And I surely do appreciate it. And I'll catch you later.